Oh, hi. I've been fighting a cold, and I'm just wondering if one of these might help a little bit. Remember years ago, the TV commercial, the Pepsi challenge? Well, Pepsi won because it was a little sweeter than Coke, or so the story goes. Apartment investors sort of deal with the Pepsi challenge in a different way. We often hear them asking us, well, is one bedroom type better than another bedroom type? Should I invest in a property that has more studios or one bedrooms or more two or three bedrooms? Which holds up better in a recession? Which does better long term? We decided to take a look at that to see which unit type might be the sweeter of the group. And so if you look at trends in King County over the last 15 or 16 years, you can see that there's a lot of consistency in the way the different unit types behave. Studios, ones, twos, and threes all seem to go up and down, sort of in sync with each other for the most part. And so really in a recession, they're all going to suffer. In a strong market, they all do well. It's the same for Pierce County. The same kind of trend exists there. The same trend exists in Snohomish County as well. But there are subtle differences. Let's go back to the King County trend and just look at how well each unit type has done. So in King County, studio apartments went up 4.3% compounded annually since early 1997. Whereas three-bedroom units went up a full percentage point less, 3.3% a year. And you can see there's a general downward trend. The more bedrooms, the lower the rate of increase in rents. Now, you might expect that smaller units would work in King County being relatively more urban than Pierce or Snohomish counties. But actually, we found basically the same trend in Pierce County. And we also found, for the most part, the same trend in Snohomish County as well. Certainly there are going to be variations on the neighborhood level, but on the county level, these are pretty clear trends. Well, what does that mean for an apartment investor? Well, if you're just going to hold your property for 10 years, that 3.3% growth rate in rents sees $100 of rents climb to about $138. Whereas a 4.3% growth rate sees that rent grow from $100 to a little over $150. That's 10% more than the 3.3% rate in the three-bedroom unit. So studios beat the three bedrooms by about 10%. And that'll reflect down to the bottom line, and it will also reflect on value. If you were to run this out for a 15-year hold, you'd really be looking at a 15 or 16% increase as a result of that higher rent growth rate. Now, there are variations by neighborhood, and so you really need to look at these trends on a neighborhood level, but it shows, at least from this quick analysis, that there are differences, and it's really worth looking at these trends. One thing to add to this would be to look at the impact of vacancies on what's going to happen to your cash flow as a result of one unit type over another. And it would also be good to zero in on sort of a standard age group. We've been adding newer properties each year since 1997. So we could refine this analysis a bit, and we might do that in the next little while. You can see the charts in the SlideShare slideshow in the article on our website that comes with this. The article is called The Bedroom Challenge. We hope that you enjoyed this video article and that you'll come back next Friday for another weekly apartment update.